Hello, traders. It is Wednesday, December 4th, and it's time for our live event. And I actually made it on time this week. Hope everybody had a great Thanksgiving. Harry, how are you doing?
I'm good. I'm good. Welcome back. Welcome back, everyone.
Yes, last week was a little bit of an oddity. We were on the eve of Thanksgiving, and you take Thursday out of the picture. You might as well take Friday out of the picture, and you might as well take Monday out of the picture because that's what I call a holiday hangover. And sure enough, there wasn't a whole lot that happened. We had a nice rally on Friday, but Monday everything came to a screeching halt. So, let's take a look at our most recent picks. That's how we start every one of these off. So I'm going to lead the charge, and then we'll go into Harry's pick. Let's see, PLTR. That was my pick from the live event last week. And you can see, let's see, the live event was right in here on Wednesday. That was Friday, Monday, Tuesday. And that has been a very nice pick. Pretty choppy in here. You can see nice big move up higher yesterday. It did have some news. Love that D1 chart. And you can see how the stock is continuing to creep higher. This is nice, steady, orderly price action. Exactly what we like to see. SHOP. I gave you that one over the weekend. That was my pick from Sunday. Let's go into the 15-minute chart. We can go into the 5-minute chart because we don't have that many data points to look at. And so here is the Sunday video. I had mentioned to everyone we are going to buy a dip. So I'm going to be setting alerts on an M5 basis for a buy signal. I'm going to do the same thing on a 15-minute basis. And you can see there's the first alert there. There's one here. There's one here. It didn't matter when you took on an M5 basis. All of those ended up being very nice entry points. You can see how the stock is working its way higher. Also brings to light the point that when you get a big pullback like this, all of you are in buy the dip mode, buy the dip mode, buy the dip mode, but you get the dip and you don't do anything with it. We had a nice little support level being tested right in here. Did I care about that dip? No. I wanted to buy one as long as it was reasonable. Support is established. This is your entry point. Then the stock takes off. It's how you got to be trading this market right now. Harry, what did you have for your picks? Let's take a look at those. And
I had two. I had Visa, and if you took Visa when I suggested it, which would have been last Wednesday, and it was at around 312 when I called it, you could have taken profit on that Friday when it ran up to 316. And you would have still been in profit on Monday at any point. But obviously, if you held it past Monday, that would have been now a losing trade. So the key there was that you have this sort of mini trend line going above it. So it's offering some resistance right around the 315 area. And when you see it unable to break out of that compression, that's where you kind of take profit there. So if you manage the trade correctly, Visa would have turned out fine. And then the other one was Moderna, where if you took it, you'd be break even right now. But if you could have taken, I'm still in Moderna, but you could have taken profit at any time in the last 2 to 3 days. You would have gotten a nice decent $2 gain there. So not the best. Both of them had opportunity for profit, managing the trade correctly. But it's a very kind of, like you said, post-holiday market, so it's hit or miss. Now that we're settling into a more regular routine, um, I think we're back to sort of a more stable picks here than last week, but we shall see.
that's a good point on the market. So we might as well take a quick look before we get into some Q&A. As we get into year end, what happens is that asset managers, they love to mark their portfolios up. Well, what does that mean? That means they're not net sellers. Right now, there's no reason for them to sell. You've got a Fed that's likely to ease again sometime soon. I don't know that it's going to happen in 2 weeks, but they're certainly in more of a dovish mode. You've got economic numbers coming out. They're solid. Everything we've seen the last month has been really good, with the exception of the jobs report, which I think we're going to see a good number on Friday because the strikes are over, the storms are over, everything else is in place. And so when asset managers mark those portfolios up a small little bit, just a little bit of stock. You don't need much. If there are no sellers, the market creeps higher. And then all the portfolios get to mark right near the high of the year. Guess what? Their assets under management are at all time high levels when that happens. And they get paid on a percentage of assets under management. So they get nice big bonuses. This is a year end anomaly. It happens all the time. And
Santa Rally.
I've got a market rule and I never violate it. You don't have to be long into year end, but you are never short. If you get nothing else out of everything that I teach you, learn that. It's a very powerful force.
And it's an interesting dichotomy there of there are two things that can cause, I mean, there are more than two things that can cause a stock price or market ETF price to go up. But the big two is you could either have a seller's boycott, right? Where, as you said, you have buyers. You don't have a lot of buyers, but you have some buyers in there. But you don't. They're not counterbalanced by and counteracted by the sellers. So or you have sort of this massive influx of high volume buying. And how do you tell the difference? Through the volume, right? So when you have a seller's boycott, you really only have volume on one side of the ledger. You only have buyers coming in, and like you said, it doesn't have to be a lot. As long as you don't have sellers in there, a smaller amount of buyers can push it up. Now, there could be time where you have insane volume, but the market doesn't move, and that's because buyers and sellers are kind of paired off, right? And then the other cases where you have high volume, but you have a lot of buyers, and you have a lot of sellers, but more buyers. The parabolic moves happen when you have high volume, when you have a combination of a seller's boycott and high volume, right? And that's where you see, more than 60, 70% of the volume on a stock or an ETF are buyers. That's much more rare. It happens, and you see them. You see those parabolic moves, and for that you need, crazy amounts of buying in there with very little selling. But the bars that you see, the candles that you see, it doesn't break out on the volume that 30,000 of this 40,000 were buyers and 10,000 of the 40,000 were sellers. But you do see it on the chart, and you can look at the overall volume to see, all right, what's causing this market or this stock to move. So when you get these drifts higher, a lot of times it is a seller's boycott. There's no reason to be selling. You have a bullish trend, so there's no reason to be short or selling. And while there may not be a reason to be buying, there's always buying going on, right? Institutions, they're always accumulating, they're always adding to their portfolio. And because there's no one on the other side of that trade, you get these kind of drifts higher.
So right now, while we're doing the presentation, I'm looking at this as a trading channel. Wouldn't you view this as an absolute? Because we're very close to it. I'd like something a little bit more parallel to the upper blue line here, and something that is just above VWAP. And that's the channel that we're likely to stay in today. You can see how choppy
Mhm.
the price action has been. There's not a lot of direction. Buyers take control, then sellers take control. There's an upward bias. Typically, this is going to be resolved with a breakout above the upper blue line with a couple of stacked green candles through it. And then you're going to get wham, a bearish engulfing candle. And we know that buyers don't have firm control because we're seeing constant retracement in these red candles. So every move higher is challenged. That tells us that there's not a clean path higher, that sellers are ever present. So you trim your size, you trade smaller, you watch the price action, and there's the lower one just got ticked out, but I wouldn't pay attention to that. It was just as a to show you visually what's going on. But if we get a couple of stacked long green candles today through the upper end of this trend line, then I would be looking for a pullback and I would be taking profits on your day trades. So we'll go into the daily chart, take a look at that very quickly. And this is what we call a gradual float higher. This is just a markup. I think we get through the week, good economic numbers. I think the jobs report Friday, they're looking for 200, 202K. Those are the expectations. We could get there and keep a close eye on the wage component. I'd like to see something in the 0.2, 0.3% range. If we get that, then we could continue to float higher. But then as we get into next week or so, these are not strong candles. I'm going to be looking for some kind of retracement in here and then perhaps a final push higher into year end. So go a little bit higher, pull back a little bit, test the bid, make a final push higher into year end. This is not a strong rally. I'd mentioned to all the members today, we've been long swing trades for the last couple of months. We've been adding, adding, adding. We're riding this move. We are not adding. We are not adding. Okay. We're looking for this move to stall out, and then we're going to be locking in those profits, and we're going to see what happens next.
The only thing that has me kind of raising an eyebrow on this market right now is I've I've watched as the market broke 400. I've watched as it broke 300. I've watched as it broke 500. Each time it's done that, it's taken a while, right? You get these kind of tests of that line, you get these pullbacks, and then it breaks through, and then you get these retests. We have not yet seen a retest of 600. So that's that. I'll be watching for that. You'll see it if it's going to happen. Obviously, you'll get two. I don't think you're going to have this very bearish day unless it's a news driven event. But the pullback that I'd be looking to see if it occurs would be this sort of test of that 600 level to see if it holds. It's just unusual that it doesn't happen. Not saying it can't. I mean, there's not a huge uh, you know um, sample size here, right? You only have a couple of those major lines: 300, 400, 500, 600, and most of them have been breached within the last couple of years, actually. So but just something I'm watching for based on historicals. Not saying it'll happen, but uh, let's see if we can get to a. Well, here's an easy question here. Just
I
about
agree
track.
with you, by the way. I
What's
just
that?
want to interject. I agree with you, by the way. I think 600 is a good level. It's about 60 S&P points. So here's what happens. We float higher. Everybody gets long weekly call debit spreads. Mistake, big mistake, because any little whiff, any little pullback, and those things are going to vaporize. They'll go to dust. And so your timing has to be very good. In here, we were buying, now we're getting these tiny bodied candles. This is where we start to take profits, okay? That's what you need to be doing. And then you wait for this. And then you have another entry point, okay? So timing is everything. I'm sorry, Harry.
No
What were
problem.
you about to mention?
As with much in life, timing is everything. But
Yes.
particularly with trading. In fact, timing is literally everything with trading. Um, Someone just quickly asked about trader tax status. Do they need a financial planner? No, you just need a tax accountant to put that in. A lot of times, you have to ask them to make it retro. So if you apply for trader status for 2025, it's not going to cover your previous year's trading. And if you wanted to, you have to ask for you have to appeal to have them put it in for retro. Usually, those appeals are um, are rubber stamped. But you do have to prove that you are trading as a job, right? So that means you have to be able to show that you're trading a certain number of hours a week, and to get that status. What does that status get you? Well, there are two main things. One is the maximum loss you could write off when you don't have trading tax status is $3,000, right? And this is U.S. So you could, what if you lost, and this is realized gains. No one's taxing your unrealized gains, by the way. So just don't worry about that. But if you know, have a realized loss of you know, $50,000, whatever, the maximum you can write off is 3,000 without trader status. With trader status, it doesn't matter. There's no maximum, right? So you could have $1 million loss and you can write off the whole thing. The other benefit is something called wash sales. And wash sales are kind of difficult to think about, but just really briefly, because a lot of people do ask about this. Um, so what used to happen is that people would take advantage of the system. Let's say you um, are long, um, you know, let's say you have a bunch of shares of Apple, right, or whatever, and it was kind of a bearish year, and you're now down $500,000 or you know, $50,000, whatever your size is, on your Apple position, and it's November, it's December. So what people used to do is they would close their position, right? So they'd close it and they take the loss, right? So now they took the loss, and then the very next day they'd open up the exact same position. So from their portfolio perspective, nothing has changed. They still own the same number of shares of Apple, but now they can share now that loss is on the book, so they could just use that and write off that loss. That's also why they started putting in that $3,000 maximum. So now that's called a wash sale, right? So you can no longer do that. You have to wait minimum 30 days before you can buy back the position that you closed. With trader status, wash sales no longer apply. You can do that, right? You can just close one and buy it, and we do it all the time. You know, long NVIDIA, close NVIDIA, back in NVIDIA, drop back into NVIDIA, right? With wash sales, if you had bought NVIDIA at 140 and then sold it at 144, and you took your $4 in profit, and then you go to buy it again and you buy it at 140, let's say you buy it again at 150, right? The according to your account, if you don't have wash sales, it still registers as being bought at 140. And let's say you sell it at 151. Now you're going to get registered as an $11 gain on that position, and so you'll get taxed on that. Even though you really only got 140 and 144, you got $4, and 150 to 151, you got $1. So really, you only in reality got $5 gain, but according to that, you would have been charged on an $11 gain. It can work in reverse if you do it in a way where you close it at 140, you know, you buy it at 140, close it at 144. Then let's say it drops to 130, you buy it again and you sell it at 135. Now you've made $4 from your 140 to 144. You made $5 from your 130 to 135. So you made $9 total. But according to the watch sale, you bought it at 140, you sold it at 135, you have a $5 loss. That is a way that traders who can manipulate the wash sales can basically have a huge profit at the end of the year, but declare a loss. And that's where the no maximum on loss counts. Because if you keep doing that, you could wind up with, you know, let's say $100,000 in gains, but be able to write off $150,000 in losses. So it's a little complicated. I just kind of gave you the you know, 2,000-foot view of it, but trader status, if you're serious about being a trader and you're treating like a business, you need to have it. Sorry, I went off on that, but a lot of people ask, and if you're going to be a trader, it's important to look into it.
Yes, I'm a trader. I like to talk about trading, accountants, no taxes, get an accountant.
Yes, get a good tax accountant that knows trading. That's important.
Right.
All right.
So I had a question on CTLT. What do you think? I like it. I think this is a really nice stock. You can see how it's getting through many of our auto trend lines. If you zoom back, you can see that one of them is a very long-term trend line. It's above all the major moving averages. It's not a particularly fast mover, but you can see how it has this move up, compress, compress, compress. So they're not able to knock it down, and buyers are prevailing. They're getting a little more aggressive. Hence, you have this nice little breakout. Don't look for any big moves, but if you're going to swing trade this, buy some shares, ride it up higher. I think this is a nice entry point. You can add on confirmation. above a breakout of that trend line right there. But yeah, I like it. I think this is a nice pick.
I like it too. Just I think you pointed out, Pete. Look at I always keep the HER up there. Look at the 1 week HER. This thing has a range of 50 cents, right? So it is a slow mover. The problem with slow movers is you need to be careful with your options. This is a great stock to own, right? Because I agree. I think it's just going to keep floating higher here. I don't see anything stopping it. And you'll get, 30, 40 cents a week or something on that position, particularly if you're holding it long term. But if you're using options, unless you're using a deep delta 8, delta 9 in the money call, just be very careful because you're not going to get that huge move. Obviously, you had 1 or 2 days here where you got a nice move up on the stock, but generally you're looking at 40, 50 cent moves back and forth throughout the day. So you have to look at that when you're looking to do options, particularly because you're not getting 1-to-1 on your option unless you're delta 1 on it. You need a stronger move in the stock to compensate for the premium that you're paying for. And that's a pick that I like, Sasha. I would just buy the stock rather than the options.
I had a question on Ulta long. This is from DJ. So you got long, you rode it for a couple of days. It was getting a little bit close to the 200-day moving average. So you decided to take profits on it. What do you think? I think you made a good decision. I think that the stock has run pretty hard in here. You've got some nice stacked candles, but you can see the tails here retrace almost all of the previous body, which tells you that it's kind of choppy and whippy. You can also see that from the price action here. You had a nice winner in here, and the market's not giving you much to work with. I think taking gains was probably a good idea. And then now you can evaluate. Oh, there's E, so it comes up with earnings tomorrow. Yes, you did the absolute right thing because it has earnings, and we do not hold over earnings. Nice.
What do we think of Comp and LNG? I don't think anything of either of them. So if we take a look at Comp, right, it's a cheap stock. It's a $7 stock. It's not, look, does it have a nice chart? It does. It has a nice daily chart. Is it doing anything today? No. In fact, you are coming up against the trend line here that you can start drawing off from September 16th. But this stock's not doing much. It's doesn't even have that much volume for a cheap stock. It's barely cracking a million. I wouldn't touch Comp at the moment. And LNG, look, also nice chart, but both of these are in compression. And we talked about this last week. There's a very easy thing to do when something's in compression. You set an alert. You set an alert to the upside. So on LNG, for example, 225.25 would be an upside alert that you put. Maybe give yourself a little leeway, 225.50, and then you just put a downside alert there right around 220, 219. Doesn't mean you short it if it breaks the downside, but you certainly don't go long. So you just set both the alerts when you have those compressions, and then you move along, right? You just forget about it until one of those alerts become triggered.
Barry, how do you like APO? That is also compressing, so no real reason to go over that one. Again, you want to set an alert upside here on one of these recent highs, and you can see how this stock has had a tendency to rally up, compress, and then make a move. Rally up, compress, and then make a move. So it tends to be a little bit chunky in its price movement. So right now it's compressing, and it probably is going to make another move higher. You'd like to see it preserve this gap right in here, which it's been able to do. It's getting close to the EMA 8 right here, which is nice. So you don't feel like you're chasing. Yeah, I mean, I could make a case for being long this stock.
I mean, look, you could go all day long and just pull up charts. You can find them on Option Stalker Easy. These type of setups of stocks that are in a good upper right hand quadrant, stocks that are in compression, right? Otherwise known as usually, takes the form of a multi-day, multi-week bull flag, and just set your alerts, right? Just set so many alerts. You could set 10, 15 alerts a day on these compressions, and every day you're going to get two or three of them popping up. And when they do, doesn't mean you take them automatically. You have to look at the market, you have to look at the sector, you have to look at the stock, everything, but you will get these served to you on a silver platter. Alerts are the easiest way to trade, is to set these. I mean, other than having a really good scanner, um, is these alerts. They set up trades for you, and then you don't have to watch them or monitor them. So you set your alerts, you move on. Someone asked, sometimes I see you trading ESP. Is that to show you can also be profitable on ES since you have a proven edge with relative strength, relative weakness? You aren't giving up the edge you otherwise have. You don't use relative strength, relative weakness on Pete's going to answer for you, Pete, but on SPY or on ES. ES is just the futures for SPY. Your relative strength, relative weakness is based off of SPY, right? So it's based off of how a stock is going proportionally to SPY. SPY is going up, stock's going up, but the stock is proportionally going up more than SPY is, or SPY is going down, stock's going up, vice whatever. That's relative strength, and vice versa, relative weakness. So there's nothing to measure SPY against but itself. So you don't get relative strength, relative weakness edge on SPY. Pete trades the market, and I trade the market based on our analysis of the market, the type of stuff that you get every morning in the chat room from Pete, the type of stuff that you hear us talk about, Pete talk about on the stream. That is what the patterns on SPY itself that you were making those trades based off of, not off of relative strength, relative weakness. You have anything to add there, Pete?
Well, I mean, I can't trade much because I'm so damn busy with everything else, and that's just the truth. So I saw an opportunity, I saw the odds were favoring me, and when I see that, I'm going to put a trade. I'll kind of give you some follow-up on what's happening. I thought we had a good chance of a reversal today, and I was looking for us to fill some of this gap before we moved higher. So I took a short here. I was expecting to see uh, some selling into this gap ahead of the ISM services number. When I didn't get it, right away, I mean, right away, I took gains on that position, very small gain. And we had the number came out here and we started to back off of that high very quickly. So I felt that there was a good chance for us to, again, get into that gap, but I needed the move quickly. So I shorted in here. And then in here, I set my stop just below my entry price so that I could get on with my day. I felt that there was a good likelihood that we would fill the gap. And so I had a nice risk reward. I had about a 5 point gain in here, but I had another 10 points possible right here. So yeah, I'll risk the 5 point gain that I have right now to possibly make another 10 points. ISM services was a fairly weak number. Market strength hasn't been good. Market's been basically grind, floating higher. Every move higher has been challenged. What does all this mean? The odds are in my favor, and I am trading the odds. That doesn't mean that every trade is going to be a winner, but most of them will be. So I knew what I wanted, I knew what time frame I needed to have it happen in, and I knew when I would be wrong, and I knew how I was going to manage the position. So the same things that you do for your stock trades also apply to the S&P 500. But as Harry pointed out, there's no edge in trading the S&P 500. So your analysis better be damn good because there's no cushion in it at all. And so it was just to put out what I was looking at and what my sentiment was and to explain why I felt that way. It's a lesson that you can all learn from. That's why I did it. So yeah, I could trade S&P all day if I wanted to, but I don't want to. I got too many other things I'm working on right now.
And keep in mind, as Pete said, nothing is 100%, right? As we know, even if you have inside information, nothing is 100%. But casinos make their entire living off of a 51, 52% edge. That's it. That's all there is, right? If there was any more of an edge, people wouldn't play. Well, maybe they still would, generous as they are, and I am. But it's a 52% edge, at worst 51.5%, somewhere around there, right? Maybe if you're in a shitty slot machine, it's 53% edge. But that's where they make their living, off that 1 or 2%, right? And then with enough volume and enough time, when you have any edge over 50% over time, it's going to pan out. So when we're talking about an edge, right? It's like, oh, that trade didn't work. Look, if I'm looking at something and I go, oh, that's worked 65% of the time historically, I can look back in my journal, I can look back on the chart. I'd say 65% of the time you're going to get a breakdown here, or you're going to get this, or you're going to get a test of this. I'm playing those odds, right? I mean, I'm better than 50-50 there. So as long as your odds are always better than 50%, and it's hard to tangibly measure that. Obviously, in a casino game, you could tangibly measure exactly what the odds are. But in general, that's what matters. Interesting question on Ulta here. Someone took Ulta, which I believe was a good trade, DJ Artificial. And now you've closed it as it approaches the 200 SMA. Closing it because there's earnings tomorrow is 100% valid. You should absolutely do that. You're clearly in profit here. You took a good trade. I hope you took it when it broke through the 100 and the 50 SMA last Friday, and then we're able to ride that up. If there wasn't earnings tomorrow, I would have recommended still holding the trade. Why is that? Because you have a natural stopping point at the 200 SMA, which is at 406.68, which is to say, it's $5 away. You're in profit now. Let's say it goes up and hits a 200 SMA and the SMA fails, right? And the SMA holds. It backs off. Well, now you know, okay, this could not break resistance. I'm taking profit, and you actually be more in profit than you are now. But let's say it breaks through. Let's say the SMA fails and it breaks through. Now you have sunny skies. Now this thing could really start to go and cook. Because it just broke through one of its final points of resistance. So when you have that situation coming up, wait to see if it's going to break through that resistance, in which case you hold, or the resistance fails, in which case you take your profit. So you had plenty of room to maneuver there, but I do agree with closing it because of earnings tomorrow. Either way, it was a good trade. I love that low there, and then it bounces up and breaks through the SMAs. And looks like it's kind of went off to the races for a bit.
So now that you have it on your radar, what do you do with it? You click GTC, you click on that candle right there, click, click. Oh, looky there. It just took me 1 second to set an alert at a critical price point, which would be above this horizontal trend line and the 200-day moving average. So tomorrow, if I come in and the earnings were favorable, earnings reactions favorable, and I get a big breakout, I'm going to get notified. And then perhaps I'll want to take a post earnings trade on Ulta. That's how you do it. I had one here that I want to get to. What do I think of snow? Ding, 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 ding. That happens to be my pick of the week. I like it. Posted this earlier in the chat room today. I love the fact that we had this big run up here. And I can't recall if I think it was somebody in one of these live events here in the last 2 weeks, because it had this big move here. They were fading it. And I'm like, you're going to lose money on that trade. That is an awful trade. Okay. And I explained why. And so you've got sell coming in after a big gain like that. You've got some natural profit taking, but the buyers are overwhelming that selling pressure. So the stock compresses. Buyers get a little bit more aggressive because they're seeing that ask dry up. So you get this nice little breakout. Love snow. That's going to be your pick of the week.
There you go. I definitely cover snow. Snow's a great pick here. And snow's a stock that investors have been waiting on for a long time. And this one finally seems to be moving. It'll be interesting to see what it does when it hits a 200 point. But if it hits there, who cares? Because you are so well in profit, you're doing really well. What do we think of Chewy and Upstart? All right, let's take a look at Chewy first. Chewy, well, Chewy obviously today bearish, had a nice little run, but look where it's testing. It tested the 50 SMA today and bounced back above it. Does that mean I'd be long? Not yet, but if tomorrow I see that 50 SMA hold for Chewy and continue to build off of today's bounce off of that SMA, then I'd start considering it for a long. I'd wait to see where it closes today. Is it going to close below $30.30? Doesn't look like it will. It certainly bounced up strong after it tested that. But right now, just tested the SMA. It is bearish today. It's relatively weak. So I would wait to see how that's going to pan out. And then Upstart relatively weak today. It is in compression. It has dropped down from a nice high, but you have a gap there. That gap from November 8th, 64.59. You are well above the gap. That gap held when you try to test it on Monday. So you've had this nice little sort of bounce up from there. It's above the EMA 15, but it is not relatively strong today. Again, I would just put this on the radar. I'd probably put an alert in at 75.50, which was the high of Monday. And if it breaks through there, then I think you're starting to look at it as a decent long. But I would hold off. Again, this is just an alert type stock.
Yep, it's going through the process right now. It's trying to get its sea legs. You've got a nice run up. You've had some profit taking in here. Buyers are starting to whittle away at that ask. So you want to make sure that this low is preserved, which higher low right in here. That's good. Starting to recover some of that red candle, but still got some jitters in here. So yeah, let it regain itself. And when you challenge this resistance level, you want to do it with conviction. Buyers need to have a sense of urgency. So this kind of crap in here and a breakout with this type of pattern, that's nothing. You got all sorts of wicks in here. So every time the stock looks like it's getting going, wham, 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 they hammer it back down. What you want to see is something like this, where you start stacking some green candles consecutively. That is a sign that buyers have a sense of urgency. They feel that this is a good value right here and that there aren't many sellers. So the train is about to leave the station. They know it. They want to be long. Right now, you don't have anything that shows you that.
I bought WFC 73 January calls. Have I made a bad decision? Yes, you did. There's no reason for that. One, why the hell are you buying what looks like at the money or barely at the money calls? I don't know how many times I have to stress this. You can always tell who a professional trader is or who a profitable trader is compared to one that is not making any money. And that is the ones that do not make money tend to go with the out of the money or close to at the money calls. Well, they're cheaper. I can get more of them. You are paying for premium. That's all you're doing. You're getting no intrinsic value in those calls. You're getting less than 50 cents on the dollar as it goes up. It is a bad trade. You're putting so much more pressure on the stock move to make money there, where it's going to be much more sensitive to a drop than it is going to be to going up. So yes, you made a bad move based on the strike of your call, number one. Number two, depending on when you bought it. Look, if you bought the calls back in late November, right, when the stock is at $78, somewhere around there, okay, I see why you might have done that. The stock is at an all-time high. I like stocks at an all-time high. But the moment you see that fail, right, the moment you see on Monday, December 2nd, where that drops down and fails, that's where you close the trade, right? When it falls below 76.14, which was the low of Friday 11.29, that's when you get out of the trade. So, and if you bought it today or yesterday, well, then you definitely made a bad decision because you're bullish on a relatively weak stock that has a low ATR, that is right now, dropping towards its SMA test, dropping towards the gap, which is at 69.95 from November 6th. and you bought a really shitty strike. So yes, you've made a bad decision. Bad on you. Don't do that.
Yes, on WFC, a couple of things. Very important to know what sector the stock belongs to, what is their business? Okay, so what real reason could there be for a bank stock to make a huge run higher? Well, if they had credit concerns earlier and now those have been resolved, or I mean, there just aren't really a lot of reasons for financials to run and run hard. If they've come out of a deep trough after a big sell off, fine, but chasing them is never a good idea. So WFC, I'd make sure to take a look at what XLF is doing. And so let's do that right now. And you can get a feel for what the overall sector is doing. And here you can see that you had a compression breakout. So bank stocks got a little bit of a pop. And if you read the headlines, I believe that was Trump related. They felt that his administration was going to be less restrictive, less regulations, more friendly to banks. And so you got the whole nature of this move was just a fluffy little post election move higher. And you could have kind of read that in the news releases and understood why WFC was making the move higher. So that's one thing I would say. And then if you are in a move like that, and you get a bearish engulfing candle like this off of the high, this is where my alert would be going off. Whoa, I did not like that red candle because it engulfed the previous 2 days off of that high. That's a warning sign. If I get out, I can always get back in, but I should err on the side of caution. And why is a bank stock running like this? Have conditions changed? No. Anything Trump related, it ain't going to happen for probably 6 months. Okay. He's going to have to go into office. He's going to have to get all of his policies approved. He's got to get his people in place. So, if this is true and banks are faced with less regulation, then okay, that might bear out in another, say, 3, 4 months. You start seeing those moves, but this is just a knee jerk reaction. So, yeah, know why you're getting in the trade. Harry's already talked about buying at the money options. I view it like buying an $8 bag of Doritos. Okay. You go home and you're feeling pretty good because you got this big bag and you open up and you realize there's like 2 ounces of product in it. It's all air, there's nothing there. So if you're going to be buying at the money options, the only time you would do it is if you are expecting a monster move higher and you're expecting it right flipping now. So your timing has to be perfect.
Always remember the house analogy on options. House is worth $1 million. You're looking at it, you're like, I like this house. I think the value of this house is going to go up. I want to buy it, but I don't want to buy it just now. So you go to the owner and you say, tell you what, I'll give you $50,000 if you will allow me to buy this house at $1.5 million in a month. So you're paying the owner of the house money for the privilege of buying that $1 million house for a price that's higher than what it is. The only way that makes sense is if in a month that house is going to be worth more than $1,550,000, right? And at that point, you can go, oh, I buy it for 1.5. It's now worth 1.7. I saved $200,000 minus the 50 I paid for the privilege of it, 1.5. But you're looking for this huge jump up in the house. Well, if buying the stock is the equivalent of just buy the damn house at $1 million, right? But buying in the money options is basically saying I'm paying you for the privilege of being able to buy this equity at a higher price than it is currently. It makes no sense to do it. And it's one of the reasons why so many traders lose money. What do we think about what Jay Powell's going to say later today? I mean, look, Powell's been a little squirrely lately, I got to say. He's gone a little bit more hawkish, but I mean, who knows? He's going to say what he normally does, which is, the dual mandate of the Fed is to price stability and maximum employment. He says that damn thing all the damn time. Um, do I think he's going to come out and say we're cutting rates or not cutting? No, no. He's going to say we're looking at the data, we're doing this, we're doing this. People parse that man's words. Oh, he didn't say the word very this time. That means something. I don't know. He's been a little bit more hawkish lately than he has been. If he comes out and he's very hawkish, the market certainly will respond. But I wouldn't expect many fireworks from Jay Powell.
Yeah, there's been a lot of Fed speak too. So you've got to hear from a lot of the Fed officials over the course of the last 2 weeks. They've been everywhere. So there's not going to be much that really changes. I agree with you. I don't think this is anything that we need to be weary of. 2 weeks from now, we are going to be doing a live event and we're going to be on the eve of an FOMC statement. So we'll see how that plays out.
Yeah, I really like GoDaddy. What do you think of GoDaddy, Pete? The person said he might have missed his entry, waiting for a pullback. What are our thoughts on it?
Wow, there's a nice little breakout there. There's a really strong move that we have in here. Dips are brief and shallow. If you're afraid, then you take a small starter position. Okay. You may not time your entry perfectly. You may get a little bit of a dip in here. It's okay because you have a small position, so you're not sweating it. I like that stock. I think that's going to be a really nice move higher.
And when would you, since this is your trade suggestion, Pete, how long would you hold that shop trade for? Get out now or leave it for a higher swing trade?
Well, on shop right now on swing trades, I'm kind of riding what I've got on because I feel like the market is getting overextended. So I think I'm going to have a market headwind probably in the course of the next 2 months. I'll get into my year-end market analysis and what I'm looking for in 2025. But given that I'm in a mode where I'm looking to reduce my longer-term swing trades into year-end, shop, I would be more inclined to just kind of trade in and out of it. If I can buy a dip and I get a little bit of a bounce higher, I'd be willing to take that position. That's kind of how I'd be trading everything right now. I would be shortening my trade duration, the stuff that's on, I would keep on. I'd ride it into year end, look for opportunities to take profits on nice little spikes higher. So that's just how I'm looking at my overall trading mentality right now. And it's not specific to only shop. That's kind of how I would be treating everything.
All right. Any reason why you're still in the video short? No, it shouldn't be, obviously. But it's a hedge. It's just a hedge. I pointed that out that it was a hedge. I did it when I had a large Amazon position, which I took nice profits in. I think like over $7 in profit. Um, and I added to Oracle, so it still is a hedge. It's a much smaller position than my Oracle or Moderna positions. Um, so it's just sitting there as if we get that 600 retest. Nvidia, which up until today had been relatively weak, is the stock that would be most sensitive to a drop in the market. So it's not a technical trade. Obviously, all the indicators on Nvidia are bullish. In fact, if wasn't using it as a hedge right now, I might pick it as a long. Which wrap your head around that, but it would be probably a good long to have if I wasn't just using it to sit there as a hedge.
Yeah, that's because of its size now. It's become a very boring stock, in my
Mhm.
opinion. It just has, and it the same. Every company goes through it because it's a battleship. Apple, Meta, Google, Amazon. All they do is just kind of flutter around, and you don't get a whole lot of movement out of them unless you get a big move like that. Okay, now on the rebound, there's going to be some opportunity. So you've got a retest with this red candle here of the 100-day moving average. You're able to recapture that. This right in here, right there is where I would be interested in trading NVIDIA with the notion that it's going to move higher and get through a VWAP E. And then in here, you get a red candle that erases that last green candle. You're taking your gains in here. So look for these sweet spots. This is the same thing that I've been telling you 2 weeks ago. I was, on top of the desk pounding and saying, this is a buying opportunity right here. We've been waiting for a dip off of this 1, 2, 3, 4 horizontal, was resistance, now support, tested successfully. This is where you want to be fairly aggressive with your longs. You want to be selling out of the money bullish put spreads. You want to be doing some call debit spreads because we're going to get a release and we have the longer term trend in our favor. So now you get the move. This is not where you're gonzo. This is where you're managing your profits and riding them. This is where you're looking to exit in anticipation that we're going to get one of these soon, especially as these candles get tiny and compressed and the volume drops off into oblivion.
I'm going to get my pick of the week, and it is Oracle. Oracle is my pick of the week. I am long the stock. So you see here on the November 6th, we get this nice gap up. Oracle maintains the gap, compresses, but then it does very typical test of the 50 SMA. Drops down. That was yesterday. It touches, barely touches right above the 50 SMA. And then today, bam, that's all it needed was to reassure investors that support level's holding, and then off of it goes. It's now well above the EMA 15 and one of the stronger stocks today. I love this chart. I like the stock. Oracle is my pick of the week for a long.
Cautionary note, earnings 12/9. So in
Oh,
a
yes, thank you.
week.
Yeah,
And
so you want to close this before earnings. So when I look at buy into earn here, Oracle is on buy into earnings, which means that's a search that you have on Option Stalker. That means 75% of the time or more, this stock is going to surge up into the earnings date. So for this stock here, obviously close it before Monday night. But I do think you're going to continue getting this surge into earnings for the next 3-4 days as you approach. So close it. Thank you, Pete. Close it before 12/9, but ride up that surge into earnings on Oracle.
all right, now you can see there's our more parallel line compared to the high of the day. So let me draw that in and see that? That's a better line right there. There's our trading channel. You can see how we're nudging towards the high, but we need those blow off candles up in here. So you're just staying long. You've got the bid has been tested today. It has survived. Buyers are in there. Volume is light. Price action is choppy. So you're probably going to get a buying climax in here. And when you do see that, you take your gains. Do you go short? Yeah, if you're a professional trader, you can, and I'll be watching for that. But for most of you, no, you just take your gains and your day trade is done.
Spooky Castle puts a detailed question here. Can you walk me through your thought process for picking option expiries? Let's assume the following. Chart looks good on the D1. We have a good entry point on a shorter time frame for directional entry. IV, option liquidity are good. No earnings or major news events in the future to ruin the trade. How do you decide which expiry to pick? Are you looking at OPEX, EOM, the weeks in between? Thanks. This is my main sticking point with transition to equity options from index options trading. First of all, thank you for your well thought out question. Always much appreciated on this end. It's an interesting question. So obviously, look, if you are trading options, right, and let's say you're day trading, right? So if you're day trading options, you're looking for that immediate move, and so you're looking for stocks that are especially strong. You're looking for momentum stocks. You're looking for stocks that you can get in cheaply on the options. In which case, you can just get the options that expire at the end of the week, right? And you're just day trading them. That's what you're doing. And if it doesn't come in, you don't want to be swing trading those day traded options. You don't want to be holding them overnight. So, you're closing out either the loss or the gain, but, there's no reason to buy the far out options. But let's say you're playing a stock like, let's say, Oracle, for example, you're not going to be holding that into next week, right? Because you do have the earnings, in which case you'd be day trading, or you at worst swing trading overnight, and you'd get the end of the week expiry. But let's say you're looking at a stock like Bros, right? Now, Bros is a really nice stock. It has a really nice daily chart, and on top of that, the options on Bros are not particularly expensive. Um, so they have this is the case here. You have monthly options, right? So obviously, you get the December 20th options. You go and you can look and see that the at the money options on Bros has a 0.72 delta. Now, normally those are at 0.5. So here you can justifiably get the 52.5 calls for $3.30, and you're paying $1 in premium on that, but you have a nice 2.5 weeks of runtime for an option like that. If you are looking at something like, let's say, Amazon, on the other hand, well, there's something that now you can choose how far out you want to go. You're looking at potentially a Christmas rally in the market, as we talked about, looking at the stock now breaking up on the upside of compression. Everything looks like it's good for the stock. Give it 2-3 weeks. Go out to December 20th. Get the 210 options at for $10. Get the 205 options for $14. That's what you're looking to get deep in the money, and give it 2 or 3 weeks when you have a stock like Amazon. So it all depends on what your mindset is on trading the stock. Is it just kind of immediate? Is it long term? Are you trying to capture the low IV? You can get deeper in the money. I tend to like longer term options. The biggest problems with options is they're ticking time bombs, right? If you don't hit, if you're not correct, you don't have time to recover as you would in a stock. If I had not bought stock on the options for Oracle when I bought it, and that drop that occurred, my options would be shot right now. But because I bought stock, I was able to withstand that drop to the 50 and pop up. So another thing you're looking at is, where's your support level? My support level in Oracle was far away, right? It was all the way down to the 50 SMA, and that was more than $12 off of where I initially entered the stock. An option's not going to withstand, no matter, even if it's very deep in the money, it's not going to withstand a $12 drop. That type of drop is just going to kill your cost. So then you get the stock. So if you have a long, deep support level, you might want to not go with the options. If you have one that's really nearby, then then that gives you kind of your barriers, much easier barriers on how to trade it.
Yes, my answer to that question is I've spent 3.5 years writing a book that will answer your question. It's a very complex answer because the direction, duration, magnitude of the move, your confidence in the market, your confidence in the stock are all going to play a role in what you feel is going to happen. And once you have all of those inputs answered, then you can decide which option strategy is going to be the best. And that drills down to the expiration month and the strike price. Option implied volatilities do play a role in it. But that's why this is the last section of the course that I'm writing, because everything else to that point goes into that decision making process. And options are simply a way of leveraging everything that we've done before that. And it requires absolute precision. So, congratulations, by the way, on bridging over from trading index to trading individual stocks. It's a tough move to make because I know a lot of people get very comfortable with it. Hopefully, you've been able to see the edge and experience it where you may not have been right on the market, but because you were right on the stock and generally in the ballpark on the market, you've been able to make money when other times trading index, you would have lost money.
Thoughts on Meta, and someone asked about Boyle. Meta, I like Meta. It is weak today, obviously, but I love this breakout here above 605, 602, certainly above 600. It broke very long-standing compression. Stock is at an all-time high pretty much. Not surprised you get a little bit of a pullback today after that kind of run up. I mean, the thing bounced off the 50 SMA. I'm doing an article on SMA bounces. Meta is a perfect example of that, where on early November, November 15th, mid-November, it breaks below the 50, right? And so you're looking, and if you have the stock, you're getting a little worried, it breaks. But when I talk about confirmation, this isn't really a break of this support here, because what it is a test. It hangs right around. It doesn't head down to the 100. It heads right around between the 50 and the 100, and then slowly inches its way back up towards the 50. Tested on 1121. Test on 1125, test on 1126, test on 1127, test on 1129. And then this Monday, what happens? Bam, off it goes. And then yesterday, what happens? Bam, off it goes again. So here you have what you're seeing is a thought process on Meta. You're seeing investors watch this drop, waiting, test, test, test. Okay, 50 is holding, good to buy. 600, here we come, off it goes. This is a great stock. It's weak today, but if you talk about buying a dip, if set your alert for the high 614.20, the high of yesterday, that breaks that high of yesterday, go long, long, long on Meta all day long.
Yes, and you can see how these price points are very important. There's your breakout of the 50 right in here. You can see the volume coming in. All right, now I know that that's a legitimate breakout. I've got some escape velocity, as I like to call it, and you're able to ride that trade higher. And then here, yesterday, you had this beautiful breakout above this downward sloping trend line, and you can see how that happened early in the day. That is a significant trend line breach. And you can see what the stock did the remainder of the day. And look at that breakout right there. That's when it got through the trend line. Hello.
What do we think of Boyle? I think it's shit. I think it's crap. That's what I
I'm glad
think.
you have an opinion.
Yeah, this is a choppy son of a bitch that's not doing anything. I mean,
Whoa.
downward trend. It's a ProShares Bloomberg on natural gas. Um, I wouldn't go short, but I wouldn't go long. I wouldn't look at it at all. And I don't know why you're looking at it unless you have some sort of personal thesis about natural gas that institutions haven't yet caught on to. But this thing is a crap pick, crap ETF. No, I fucking hate it.
Yeah, I don't see anything there for me either. So we're going to continue to move on.
Yes. Let's move on. Okay. Um, let's see here. IP, same thing as before. It's compression. Just put an alert. Easy answer. Pete, Reddit, app, Tesla, exception to the short-term plans. Also, which one of them do you like best, and why is it Reddit?
Did I say it was Reddit?
I don't know.
I didn't say it was Reddit.
You've been a Reddit fan, though.
I love Reddit. Okay, 2 years from now, if you open up your portfolio and look at Reddit, you're going to go, "That guy knew what he was talking about." Okay, so don't ask me how to trade it on a 10-minute, 15-minute basis. I'm in it long term. Okay, that's where my focus is on that stock. I'm not even looking at it. I like Tesla. I think Tesla's going to continue to move higher. You can see higher lows starting to hit up against this resistance level. I don't know what you want me to say. I've told you that I like all three of them long term. So you take your capital and you divide it in three and you buy some of all of them. It's like, which child do you like better? I like them all. Okay. I do happen to have three kids. I'm not going to give you a favorite.
Um, so we're asked about Netflix here, and Netflix is one of the nicer charts you'll ever see. I mean, there's nothing not to like about this Netflix chart. Nothing. It's a slow, steady grind. It is stepped up. It is constantly breaking out of compression, holding that break, continuing up. I mean, what is the limit? Maybe there is some resistance if it hits 1,000. Um, I mean, I don't really see much not to like about Netflix. In fact, um, Netflix is not a bad pick. If you want a pick that is not that doesn't have the earnings date like Oracle does, Netflix would be a really good backup pick here to take. Now, you do mention that, yes, the options on Netflix are crazy expensive, right? And the stock obviously is fairly cost prohibitive. What are you going to do if you have, $5,000 in your account? You're going to buy 5 shares of Netflix. It goes up $20. You make $100, and you're like, yay. Okay. Look, this is where call debit spreads. I know Pete's not a huge fan of them, but this is where call debit spreads can be your friend a bit if you mitigate it, where you can take the 910, or sorry, the 915 calls, you buy those, you sell the 920 calls for $2, and then you the total $2, 915, 920 call debit spread. You do it for a $2 debit. And the stock finishes above 920 at the end of the week, you make $3 a contract, and you're risking $2 a contract. So if you want to mitigate against a really high price on those options, and you can't afford a stock like Netflix, but you want to get in on a really good chart like that, this is where I believe a call debit spread can be very helpful for you.
I like call debit spreads. I'm not opposed to call debit spreads, but I like call debit spreads on weekly options right flipping here. Okay. I don't like them up here when I don't feel like the market's got much more gas left in the tank, because my timing has to be perfect. And if I get any kind of little whiff off of this high in here that lasts even a couple of days, those things are going to vaporize. Okay. Down in here, I feel much more confident that I've got a strong market tailwind to fuel the move higher. That will help the stock in case it has a hiccup, and I'll be able to make money on it. So, into these troughs, I absolutely like call debit spreads. In here, I like call debit spreads, but I need that dip and I need that support. And then I'm going to get some spring in the market. I've got some upside impetus in the market. That's when I like them. If I make a high and I start struggling and compressing, I hate them in here because I don't have that market fuel to push the stock higher.
Okay. All right.
PCOR. How do we like
PCOR.
PCOR?
Mm-hmm.
Not
Yeah,
bad.
not bad. I mean,
It's a nice breakout right in there. It's getting through that horizontal resistance.
I mean, I don't know. I like it. Yeah, it's not. I'm not excited about it, but I like it. It's not a bad stock. I mean, these are
Cloud.
the things you're supposed to be looking for, like that type of chart.
Yep. Obviously, this is really nice in here. You can see where this is going to be hitting all sorts of searches that we have based on our trend lines. So you're going to be triggering those right in here. Obviously, I like it better here off of AVWAP, and it's getting through these resistance levels on good volume. But yeah, would I take a position here on this breakout? I would take a small starter position here. And if you're not sure, and you feel like you're chasing, you can't go wrong with a small starter position. You're not going to think twice about it. You're not going to freak out and uh, have nightmares about it. It's just a small position. And then if you get continuation and confirmation on this move here, the follow through that you need, then you can gradually add to it. And once it starts to have a decent path higher, now your average cost is way down here, then it's much easier for you to add because you've got your average cost still way down here and you are adding to winners. Very important concept.
By the way, I made a day trade yesterday, and I still really love this stock, but it is a little bit of a risk stock. I know that Citron came out with a bullish tweet about this stock. NBIS, this is sort of a spec type trade. I think this, not much history on the chart, but everything about the volume on this, everything about the gaps up, and everything about the way this has moved since its IPO suggests to me that this could be a really nice, trade. If you there's no options on it if you buy the stock on NBIS, so I'm just going to throw that one out there for people. I made a nice
Is it
little a nice gain on it yesterday, and I might actually go back in again.
Harry? Can you give me that symbol again? Is it Mary Boy?
Sorry,
Uh,
Nicholas Bob IS.
okay. Because everything else I brought up did not look good.
Yeah.
I had one stock that was 88 cents and heading south fast. Okay. Yeah, so we got earnings that's in 2 days. Okay, so uh, all right, IPO earnings coming out, been able to get through horizontal resistance. Nice volume in here. Yeah, obviously people looking for probably a good number on that. And what did you say they do? Technology company, infrastructure, AI builders worldwide. Well, hell yeah, you put AI in the name. I
Yeah,
like it
exactly.
too.
It's a total spec trade, obviously, when earnings coming up, and it's an IPO type stock. So, just throwing it out there. Citron loves it, but Citron is also known as a pumper. So, um,
I get all sorts of videos, and there'd be videos ahead of this live event and videos on all the recordings that I do. And, the latest thing is sign up for my new trade signals. They use AI and they search for patterns. I'm like, oh, Jesus God, please don't fall for that crap, folks. It's
yeah,
not
I
true.
love
If
QBT, Quantum Computing Inc. The damn company doesn't even own a quantum computer. They just
oh
called
God.
themselves Quantum Computing Inc. I think before this they were sports, like a sports equipment manufacturer.
Oh gosh. I mean, so if I ever figure out an AI program and it works really well, I'm sorry to break this to you, but you're never gonna see it. Okay. And if you have an AI program that's a money machine, I don't expect you to share that with me. That's just reality.
Oh yeah. Um, Although if you ever decide to do an IPO of a company like that, just call it, quantum AI singularity or something. Stock will take off. Um, what is my thought process on Moderna long? This is one I wrote an article about this a while back on mixing fundamentals with technicals. It's more of an advanced trade. Obviously, I know the stock very well. I traded this stock quite a bit 2 years ago with a very large position in it. I think I had at my height 90,000 shares of Moderna and made quite a bit of money on it when it popped back up over. I held it as it dropped all the way down to like 50, and then it popped up over to 120 or something, and I closed it. Right here, one on the technicals, you have two layers of support, right? You have horizontal support coming in at around 41.50. That's a mark at 11.12. That's a mark at 11.13, 11.26, and then all the way through in that compression. So one, you have that level of support. Then you have a low of 35, 36 right there that this stock is just, in my mind, not going below. It is a stock that was a huge benefit because of the vaccines, but now it has all these products in the pipeline, and every now and then, every few months, you'll see a press release about one of their products, and Moderna gets this huge pop off of that press release. So this is a buy and hold type stock for me. I believe there's a lot more upside than there is downside, which is always what you want in a buy and hold stock. So it is a combination of seeing two strong levels of technical support and also having a kind of a deeper fundamental view of the company than most would, given how extensively I traded it in the last 2 years. So, this is more of a buy and hold. That's why I'm not using options on it. I don't have a timeline on it. But I do believe that in, relatively near future, you're going to get this test of the 50 SMA up there. And that's what I'm holding it for. I could have taken profit several times after I took it. In fact, at one point, I was over $4 in profit on the stock back on November 25th. So, and I did not take the profit there, and I held it. So I'm continuing to hold that stock, but it is a mix of fundamentals and technicals.
You should, by the way, be very aware of the fundamentals if you're trading biotech stocks. I mean, you can do short-term trades on biotechs, but anything on a swing basis, you have to know what's going on because there are a lot of companies that have one or two products in the pipeline. They are in a cash burn situation. And as good as the prospects might look for this drug getting FDA approval, you don't know what's going to happen. And those are huge material news events when they happen. So
Mhm.
the rug can easily get pulled out from under you. If you're short, heaven forbid, some of these stocks, and they really do have a great drug that comes to market, the sky's the limit on it. So tread very cautiously. If it's a biotech like Amgen that's got a huge pipeline, lots of different revenue sources spread out across many different pipelines and products, fine. Okay, now you don't have that same risk profile.
And also keep in mind if it's an American company or not, because despite probably like AstraZeneca is not an American company, for example, whereas Moderna is. Johnson and Johnson, for example. Despite popular belief, the standards for getting a drug approved, and it could be any drug. I'm not talking vaccines. I'm talking any drug. It could be a heart medication. It could be a cancer treatment. Whatever it is. In America, is significantly higher than anywhere else in the world. The number of trials and tests and proof that you need to present to independent boards that need to vote on each stage, each step of the way, is much more significant in the U.S. than it is anywhere else. Does that mean it's infallible? Does that mean that sometimes things don't get released that don't work or that have unintended side effects? Of course not. But when you have these American companies, and you get an FDA approval, that is not easy to get. It just isn't easy to get at all. So it does give a huge boost to those stocks. It gives a huge boost to the Pfizers and Johnson and Johnson and Moderna's of the world that they've gone through all of those hoops to get that. But you get a much more looser and faster set of products coming out when you have a non-American company, simply because they don't have to go through the huge process of the number of trials and testing they have to do. What do we think, Peter? BHC and Lunar. Let's see. Lunar, we talked about a couple of times. It's fallen off a bit, but I wouldn't go long now. But I'd certainly set alerts on that stock.
Yeah, it's made a nice run up. It's pulled back a bit today. Here's another company that they've got a government contract back in here that caused the big spike up. So that's nice. It gives them some legitimacy, and the stock compresses for a long time. Here's the problem: they don't make any freaking money. Okay.
Right.
So all this hype that you get around these stocks is predicated on what they will be, not on what they currently have. Okay. So you got to at least have a little bit of familiarity with the company. When I see an earnings reaction that gets spanked down like this, why do you think that would be? Oh, look, the stock rallied on the earnings announcement, and then it's spent the whole day pulling back, and you got a gigantic bearish engulfing candle. Mm, Probably not that excited by the earnings. The prospects might be good, but there's no money right now to be had. So know who you're investing in, know what their revenue source is, and I think that's going to help you. You don't need a lot of fundamental analysis, but you should have an idea if the company is making any money, okay? It's important.
Yeah.
Uh, I did draw a long-term trend line here because I had a question earlier today. How do we know if a stock is making a new all-time high? How do we know where it might possibly run to? Well, it's all based on price action, and how the stock makes that new high is critically important. What happened as the stock was approaching that new high, critically important because that tells us how anxious, how aggressive buyers are. What is their sense of urgency? So if you start getting stacked green candles through the all-time high on massive volume, it means something different than a stock that is just poking through the high that's been choppy all the way up to that high, which the S&P 500 is diversified. It doesn't make big straight line moves because there are 500 companies. If you draw a trend line like this connecting some of the highs, you can see that's about where I think the market can get this year. I think we probably rally up a little bit, have a tiny little pullback in here, maybe not even quite to this depth. Harry said 600. I like that level. I think that's a good check of this previous high. And then you finish somewhere around here. What is that? Maybe 612, maybe to 615 at most. But I start getting pretty leery as we get close to year end, and that's where I start scaling out of some swing positions. You can leave some on into January. January is typically a good month, but we got to be watching. The higher we go, the greater the chance that a drop will be coming because this is very light volume, very tiny bodied candles, not a high quality move higher.
So yes, and I think this is a common problem that people have, not problem, but issue people have, Pete, which is Ian Lightsey says, with a small account, I'm struggling with some of the weekly picks of large caps, not comfortable with options yet. Good for you that you're not just jumping in. Should I focus on small shares of large caps or cheaper stocks strong in the OSP searches? Well, certainly if you find these cheaper stocks, like maybe a stock like Bros, for example, um, for a small account and you're doing shares, that's ideal, right? Because you can get a larger number of shares, you can capitalize on a decent move. If you followed the NBIS trade yesterday, you would have done very well on that with small shares. But what you should be doing right now, and this is outlined very detailed in the wiki. I pound the table on this all the time. Is it doesn't matter. Don't be looking for your huge profit gains at the moment. What you're looking for is to build up your muscle memory. So even if you're going, all right, you know what, I can only do 2 shares of Netflix right now. That's all I'm going to do. What you're looking for is how is my win rate? How is my my return? How is my profit? Um, and at the end of each month, where did my mistakes go? You're in a learning process right now. You're not in a I'm going to, try to make a huge amount of money on this trade stage right now. So this is a good opportunity for you to refocus yourself away from getting that huge profit, right? Because that's where the options world lives. That's where I can buy this option for 25 cents, 25 bucks, and then sell it for, $1,000. Get off that. You're not on that. That's good. So instead, focus yourself on what I'm doing here is I'm working on win rate. I'm working on my picks. I'm working on journaling. I'm working on getting the fundamentals, well, kind of pun intended, of trading down. And then once you do that, you can be more confident to maybe add to that account. You can be more confident to start moving on to your next stage, which could be options. But certainly, if you do see a good small cap stock like a Bros or something like that, that is showing up on the searches here. And by the way, Red Hot is a great search. There's currently right now. Let's see here. We have KDP. You have some small cap stocks on there, and Green Royal Flush, another really good one there, where you can look at something like maybe Etsy, where you put an alert on the 200 SMA. That's on that. Those are the type of things you could be looking for, but don't focus so much on your overall profit, more on your trades.
All right, let's do a recap of the market very quickly. We're getting that nice float higher. You can see there's your trend lines. I'm still looking for a possible breakout to the high in here. I don't like the fact that we just had this red candle in here. you're kind of walking on eggshells right now. We're what about more than halfway through the trading day. So this price action is no bueno. It's just kind of garbage. If you've got a stock that's pushing higher, there's no reason to bail on it, but you shouldn't have any big kind of size on right now. So that's
Is
all
there
I
going
got
to
for
be
you
a
today,
VWAP
Harry.
test?
I will say that Harry and I are going to interview one of our traders tomorrow. We're going to do a recording. It will not be a live event. And so I will post that on my YouTube channel when we have it ready. And we're going to find out about Ari's journey and kind of what some of the key milestones were for him. I think it's going to be very encouraging for a lot of you because you're going through the same process. And I'm sure that some of the same things that helped him see the whole picture are probably ones that you're going to run across as well. So please watch for that, and we will see you soon.
Yeah.
Thank
And
you,
keep
Harry.
an eye on this VWAP test here on SPY. If it breaks VWAP and VWAP does not hold here, this is a good time to start taking some profit on your longs. All right, everyone.
Trade well.
Trade well. So see you next week.